but we have our first corporate conversation lined up on the show now. So let me welcome our guest. We have the management of BHEL joining us now. Now, its consortium with Titagarh Wagons bagged a mega Vande Bharat project order just last month. This includes a 9,600 crore rupee order to supply train sets. And as of December, we had BHEL's order book, which had surpassed the 1 lakh crore rupee mark. So how is the execution panning out? What is the scope of the thermal and nuclear power projects? We have lots to discuss, and we are now joined by the management. Mr. Nalin Singhal, Chairman and Managing Director of BHEL, joins us now. Mr. Singhal, thanks a lot for joining us. This is Pavitra. I would like to begin just with this order that I mentioned, that the consortium with Titagarh Wagons has bagged this big order on the Vande Bharat trains. Can you take us through what BHEL's share is in this, and then what is the execution timeline as well?
So the BHEL share is almost half, equal share. Both of us have almost equal shares, and we are doing the electrics in the control systems and the bogies, while our partner is doing the mechanical part of it. And this is the rakes are to be delivered over the next 5 years. And 35 years is actually the issue is really that this is something, which is we have to look at the AMC for 35 years. So that is the major thing that we have to be looking at. So they are very, very tight delivery in terms of quality as well as deliverable. It's a very tough order that we have taken, and we are going ahead and planning and preparing ourselves for that.
Mr. Singhal, just to understand the revenue accretion from this order, 9,600 crore is for the manufacturing of these 120 Vande Bharat trains, which will happen in the next 5 years. Will the amount of 9,600 be divided equally, or will it be more back-ended? And secondly, once the operations, O&M or the AMC begins over a period of 35 years, then you're expected to get in close to 13,400 crores. That's what our calculation shows. So please correct us if we're wrong. How will that be split? Will 13,400 crore be divided equally over the next 35 years?
Almost similar sort of shares. And there are some. If you look at from the time period, there are some ups and downs in terms of the years where some replacements are due. So it's really planned out that way.
Mr. Singhal, just to clarify, you mentioned that your share is exactly half. So
almost,
that is.
I didn't say exactly half. I said almost half.
Almost half.
Almost equal shares is what I said.
And that is for the initial delivery of the train sets as well as the management over 35 years for both parts of the contract?
So over 35 years, it will be less than half, slightly less than half. And on the delivery part, it is almost half.
So if I could just ask you, I mean, all things put together, over a period of 35 years, what is the revenue opportunity for BHEL in terms of your share? And by when do we start seeing some of that flow through in the P&L?
So you see the delivery, the almost 2 years for the prototype, and thereafter the delivery is going to get ramped up. And as the deliveries get ramped up, the maintenance part of it starts. So that will take a few years then to come into the P&L.
Okay. So Mr. Singhal, just on the railways, before we talk about other parts of the business, we know that tendering has been fairly active from the railway side. What is BHEL looking at FY 24-25 onwards in terms of opportunity for the railway? If I were to ask you, say, what part of your book would you want to target in terms of business coming in from the Indian Railways? Can you give us some sense, some color, and what kind of work are you looking to execute as we go down the next 1-2 years?
So you see, we are all aware how ambitious a target Indian Railways have set for themselves in terms of asset renewal, in terms of rolling stock, signaling, all those areas. And there is a huge amount of upgradation which is going on. Now we want to be part of this entire story. So this is our, we have coming in now for the semi-high speed. And this is the first tender, first big tender. Then they are going for 2 more tenders on the push-pull technology and aluminum coaches. So as the technology upgrades, we also want to upgrade because we see this as a very major future market on the rolling stock side. Then the other side is also the signaling side there, because the railways is looking at a complete overhaul of the signaling system. And there also we have started development work. We are looking to take a foothold in that market also.
So on an aggregate basis, can you tell us what's the overall size of the tenders from the Indian Railways, say in the next 12 months, and how much will you be able to participate in? Could you give us that number?
So you see, what the railways are doing is they are clubbing their requirements. They're coming out with mega tenders, and the last two tenders have been in the similar range also. So I think there'll be going to be another another two tenders in this year, and more later on. So and we are looking at partnerships to participate in any tender which is coming on as far as the rolling stock is concerned.
You're saying two more mega tenders in FY24, and the last tender was more than 50,000 crore rupees. So we should expect.
No, this is 23, almost 23,000 crores. So this one, the last we're talking about, almost 23,000 crores.
Okay, so around 25,000 crores worth of two more tenders are expected. You're saying similar size.
Yes, we are expecting.
And you will be participating via a consortium.
We are looking at that issue, in terms of the technology requirements, because as the technology upgrades, we also need to upgrade our technology, for which we will be requiring partners who have the technologies, who have the qualifications. So that's how we are working on it.
Okay, got that. That is the questions on the railways. But let's move on to some other parts of the business as well.
Pavitra, just before we move on to the other business, I actually had a follow-up on the railways. In terms of whom you want to partner with, Mr. Singhal, give us some sense. I mean, and also talk us through your relationship with Titagarh. At least for the next two tenders that you spoke of, will Titagarh continue to be a partner? Are you looking at other companies, listed, unlisted? And how do you rate the overall competitive intensity? I had the good fortune of talking to another one of the industrial companies just last week, Siemens, and they are extremely aggressive in this space as well. Everyone's looking out for the railway opportunity. So what's going to be the tipping point or the defining point really here? Is it just going to be aggressive bid pricing? And would you look to sort of get aggressive as well?
Look, aggressive bid pricing is not really the road to success, because the bid, once you get the bid, you also have to deliver. So I firmly believe that delivery is the key to success in any market, and our bidding will stay within the bounds of what we can deliver against. That said, we have managed to win the first one, so that shows our intent and our capability.
Okay, just one more question, sir, on this. You said that there are two more tenders that you're looking at. Do you have any kind of numbers you can tell us on the number of trains for these orders?
I don't have those numbers right now with me, but these are in the pipeline, which is happening now.
Okay. Moving on then to the defense vertical then. India's defense capex is rising. You've created a dedicated vertical defense and aerospace business group. On 1st of April, you announced an LOI which you won, where you were going to be supplying strategic equipment worth 3,700 crores. Can you take us through your defense plans?
So you see, in the defense side, this LOI that you are talking about, this is so what we got for a supply of 20 upgraded SRGMs. These are SRGM, the super rapid gun mounts, which are the guns on the naval ships, and these are the upgraded versions. And we are expecting further orders in the same, of the same category also in the current year. And besides that, on the defense side, we are also looking for a range of strategic requirements. There are other wherever we can partner with, because in terms of, we look at from the perspective of our capabilities, our engineering capabilities, our manufacturing capabilities, our manpower base. So with that, I think defense is a very major one that we are looking to forward to in going ahead.
Okay, but some more sort of idea of the execution time frame here. By when do you see some sort of a meaningful contribution from defense revenues to the overall pie?
So defense orders, you see, they are all slightly long lead orders.
Yeah.
And it's in 25, 26, that's a sort of when the deliveries pick up, and then they go on for another 5 to 7 years. So that's a sort of frame that time frame that all these orders have.
Okay.
The developmental, and this is of course where we already have a product, and if it's a developmental order, then it's longer, the initial developmental phase, and then the ordering phase, and then the supply phase. So that becomes even longer.
Okay, Mr. Singhal, you're talking about defense, being this huge opportunity. Can you tell us in, say, the next 5 years, how much of the pie do you think will come from just the defense space?
So, let me put it this way, that today, if you look at our total business, almost about 75% is the power sector, and about 25% or so is the other than the power sector. We are targeting to go at least 50% from non-power, because we understand what's happening that side, and that is why this ramp up railways, defense, aerospace. So this is happening, and in addition to that, of course, we are also looking at coal gasification as another area where we have our own technology development has happened. So that's another major area. So
this 50% target of your overall book or portfolio being non-power, when do you want to achieve this number?
I think we should achieve that in the next almost 4 to 5 years. We should be able to
5
achieve.
years.
So as you get towards that target, Mr. Singhal, talk to us about execution, because at the end of the day, your shareholders are watching the P&L quite carefully, right? And we're just looking at revenues now. FY20, of course, after that we had COVID come through, so 21,400 crores. Then revenues dipped because of COVID. I'm guessing 17,300. FY22, you closed at 21,000. So give us a sense in terms of top line growth. What's a steady state? Do you anticipate ahead for the company, and will it be steady at all, or could it be very patchy as you're steering this huge, large ship that's BHEL from 83% business coming from power now to 50% power, and the remaining all these new sunrise areas?
So you see, as I look at it, the way is upward from here, where we stand. We have been over the last 2 years also. We have been going up. The issue really is, you see, we have faced a dip in the past, as for almost 3 years, there was our mainstay was, as we are all aware, was the thermal power. And for 3 years, almost 3 years, there were no orders. So that dip has happened, which has hurt us. Now the orders have started coming in on the thermal side. And in the meanwhile, we have made this huge effort towards the diversification. So what's happening is now any order that we get, whether it is thermal, whether it is railways, whether it is defense, they will have a lead time of at least 1.5 to 2 years when actually the revenues will start flowing in. So as I look at it, from about 24-25 onwards, our shares, you see, earlier we had got a nuclear power NPCIL order, which is also now rolling out. So given this, from 24-25 onwards, our revenues should start going up. And as we go ahead, the other thing which is going to kick in is what I mentioned, coal gasification is another one where the country has a huge target coal gasification mission. And we have the only proven technology for high ash Indian coal, which is indigenously developed by us. So given that, we are working on the first coal gasification plant also for that ordering also should happen in the current year. And that again will ramp up. So these things put together, I don't look at it from as being patchy. I look at it as being steady state upward.
So, Mr. Singhal, final question. Let me ask you this, and I'm just quoting an estimate from the street. It's one of the brokers. And their estimate, as our colleague from the research team tells us, is that your earnings are anticipated to climb 5-folds over the current year, FY24, going all the way up to FY26. And your order book, all the sectors put together, could surge from, I think you're just over 1 lakh crores right now. It could go to 1,80,000 crores. Are these kind of very, very bullish estimates, ballpark accurate on BHEL?
I wouldn't do crystal ball gazing at all. I'm sorry, that's not what I would like to do. We are aggressive, but I wouldn't do any crystal ball gazing at all. So,
Mr. Singhal, we leave this conversation here. Lots more to chat, but another time. Thank you very much for joining us. That's BHEL trying to be a diversified engineering company, trying to get more than 50% of its revenues from the non-power segment, and they are making inroads in railways, defense, in the renewable energy space. The stock today is higher by close to about 4.5%.